everyone. Melissa here with FMO Media. Today, we are joined by Amy and Anthony Livinati for our podcast. Amy and Anthony are actually owners of Delaware Financial Mortgage, and we'll be talking a little bit about what got them first into the mortgage business and some more about the market at the moment. So, Amy, Anthony, thank you so much for joining me today.
Thanks for having us.
Yes, thank you very much.
Of course. So tell us a little bit about yourself and how you got started in the mortgage business. And I don't know, actually, if you guys have different backgrounds or the same background. So I'm really excited to hear from you.
Sure. Well, I was living up actually in New York City doing a lot of consulting work for Arthur Andersen. And at the time, there was a big scandal that happened with Arthur Andersen, Enron. And a lot of us, 800,000 employees, lost their jobs. So I was looking for something else to do at the time. My father and my uncle were in the mortgage business. So I started actually doing some database work for their company, kind of like CRM stuff is today, just kind of cleaning up their database and working on that for them, and just became intrigued by the business. So once out of a job and we moved back down to Delaware, I decided to get into the mortgage industry. And that's how my career started.
My path's a little different. Again, I was in New York. I didn't lose my job due to Enron, but I was working for an accounting firm, doing some travel, doing consulting. And when Amy and I got married, we moved down to Delaware. I still worked for my accounting firm, doing my travel. And then I came on board with the mortgage company. It was about a year after Amy did.
Interesting. Did you guys meet in New York?
We did not. We actually met at the University of Delaware in college, and both got employment up in New York.
That's very cool. Interesting. Yeah. So you've been up and down a bit of the East Coast together.
Yep. So I grew up in Delaware, and Anthony actually grew up in New Jersey. So we're very familiar with the East Coast.
And for the record, I got the job first in New York, and Amy followed me.
Absolutely.
Too funny. Well, besides being, a partnership in life and partnership in business, what sets you guys apart from other mortgage companies?
I would say that is actually one of the main things, is that we are a couple, we are a family-owned mortgage company, and that definitely does set us apart than other companies in the area. So we're a local company to Delaware, even though we are licensed in Maryland and Pennsylvania as well. And you don't find that after the crash of the housing crash back in 2009. It's changed. A lot of people that were mortgage brokers in our world got out of our world and jumped. I don't want to say jump ship, but that's kind of what they did. They went under the umbrella of retail shops and got out of the broker world. We decided to kind of dig our feet in the sand and say, hey, we're staying here because we believe it is the best place for clients. So I would say that because we're local, family owned, it definitely sets us apart.
That's awesome.
Yeah, I would definitely agree with that too. One of the things we always tell our clients and our real estate partners is we are here, we're local. So if you have an issue or a problem, you can get in your car and drive and walk in and meet me face to face, or I can come meet you face to face. And you're not talking to someone that's in the middle of the country that just hits, do not disturb every time you call and never answers your questions for you. So, we pride ourselves on that, and the fact that you will always get an owner or one of our loan officers on the phone when you call.
Absolutely. I agree with that. This is the largest investment that most of our clients are going to be making in their lifetime. And to have us be so involved in their transaction is important. Being able to see us face to face, being able to walk into our place of business, deliver us documents, ask us questions, is so important to our clients and what we really pride ourselves in.
Well, and tell me a little bit about what the community of Delaware is like. Who do you guys mostly work with? And, is it the type of area where you could run into one of your clients when you're walking down the street, if that's the case?
Absolutely. Well, Delaware is a very small place. They say Delaware, you hear 5 degrees of separation. I would say in Delaware, it's a degree or 2 of separation. Everybody knows everybody. It doesn't matter where you go, you're going to run into somebody that you know, which can be really nice, especially in our business. It's nice to see our referral partners out and about in the community. It's nice to see our clients, people that we work with on a day-to-day basis. But that's also what makes us unique, right? I mean, so Delaware, you have to definitely be on top of your game. You have to definitely offer the best customer service that you can, because you're going to be so closely involved with these people on a day-to-day in your communities, kids playing sports. I mean, you're going to cross so many paths with the people within our business and the clients that we serve, for sure. It's different than some other metro areas.
That's exactly what I was thinking too. I'm like, oh, wow. If it's a smaller, tight-knit community and there are 2 degrees of separation, if that's the case, then you guys must be really good at what you do with all the stars that you have on your reviews.
Absolutely.
Is that right, Anthony?
Yeah, I mean, I would agree. And so it's kind of nice, close knit. Everyone does know everyone. So like when we have such a great reputation, that goes a long way. Kind of like what everyone says, that saying is like, you go to a restaurant and it's great. You might tell 3 or 4, but if you have a bad, you're going to tell 10 people. So, I mean,
what advice would you guys give to someone that's wanting to pursue a career similar to yours in the mortgage industry?
I would say that whoever is considering coming into this industry definitely has to be adaptable. It's forever changing. There's guideline changes each and every day. Sometimes, at the drop of a hat, a guideline will change, and you have to be adaptable to that, because obviously you're giving guidance to your clients. So you have to be aware of what's going on in the industry. Otherwise, you could really goof up a transaction. And we see that happen within the industry. I mean, we get a lot of people that will call us and say, hey, my lender that I had this transaction at, didn't realize X, Y, and Z. What can you do? And it's so important. And this is another thing that we really pride ourselves on, is we know this business. We make it a point to stay on top of things with all the changes that are ever happening, to make sure that we are not in the position where we're goofing up a transaction to go sour or to go south. So it's just, you've got to be adaptable. You've got to be willing to learn and understand that every single transaction is going to be different, and that you're going to have to educate each consumer in their own way, right? So every transaction is different. You've got to make sure that you know the product that you're selling to them and what's going to fit them the best. And that's what's nice about Delaware Financial, is that we have the ability, and we work with multiple lenders to be able to offer solutions to multiple different situations. Whereas a retail lender, they're going to be kind of pigeonholed into their own products that they have available.
100%. That's awesome. Actually, and can you go a little bit more into that? Because I feel like people don't actually know where they might get their loan from, right? When they're going to go buy a home, they might go to maybe they've gone to the same bank for 20 years. And so they think that might be the best place to go to. But I know that there's definitely benefits to also dealing with a broker that's local, that knows the area, the local laws, all of those different things. So let's talk a little bit about the differences between a broker and a retail lender.
Sure. Well, I agree with you. I mean, a lot of times people will say, oh, I bank with WSFS, so I'm going to go to WSFS to get my mortgage. I would say that that's what our parents did in our parents' generation. Now you have mortgage companies that our sole focus is originating mortgages, the financing for one's home, whether or not that be a purchase or a refinance or a home equity loan. That is all we focus on. Whereas banks, obviously, they're depository institutions and they offer multiple products, mortgages, auto loans, things like that. Our sole focus for our clients, are mortgages. It's nice because we are a wholesale broker. So I don't work directly, and I don't want to call any companies out, but let's just call the biggest one in the room, Wells Fargo. So I don't work directly for Wells Fargo, where I'm limited to Wells Fargo products as well as their rates and guidelines. I work with, we work with 20, 30 lenders that we will go out there and find the best product, the best rates, the best fees for our client and their situation. It just gives our clients and us just so much more options for homeownership. We not only can provide more options, but we typically will be the lowest rate on the street as well as the lowest fees.
I knew there were some really great reasons behind it, and it feels like it's a really customized approach to being able to find the best solution, because everyone's in a different financial state, right, Anthony?
Absolutely. Different credit situations, income levels, amounts down, employment. I mean, you name it. If there's a product out there or a loan that exists for a client, we're going to find it.
That's what makes our job exciting.
Yeah.
People think that, oh, you just sit there, you push papers all day, but every day is a new day. So we are not selling the same thing every single day because everyone's situation is completely different. Because this could get very monotonous if you're just dealing with the same type of person, same type of loan every single day. Whereas for us, we come in every day and it's a new day, and it kind of gives us that excitement to do what we love doing, is helping people buy a house. Like Amy said earlier, it's their biggest investment that most of our clients will ever make in their lifetime.
100%. It's like an adventure every day.
Yes,
Yes, that is
Some
for
good.
sure.
Most of
Well, for every adventure, we need some resources. So what would you guys say are some of the best resources that have helped you along the way? Has it been other people in the industry, mentors, coaches, technology? What are some of the best resources that help you help your clients?
I would say that our best resources are our lender partners. We rely heavily on our lender partners. And again, we're not limited to one. So we have mentors at each and every one of these companies that we can reach out to. So the way it's kind of set up is you've got the lender and you've got the account executive, and then you have us. So if we have any questions or need partnership or need guidance or have a question on something that particular lender has, we will go to that lender, that account rep, and pick their brain and find out what we need to do to make the transaction work. So I would say for me personally, relying on my partners is the biggest resource that I have. And then ultimately, it's the biggest resource that my clients have as well.
I'm going to change it up a little bit, and let's talk about some common myths that people believe about owning a home, buying a home for the first time, owning a second home. And I'll have you each answer this question. And it might be the same myth. I don't know. Let's find out. But what would be one common myth, Amy, about owning a home that you would want to debunk to the general public?
I think that the biggest myth that I see out there is that you have to have a substantial amount of money saved up to put down for a down payment. There's, and you don't know what you don't know. So I can understand why people think, oh my gosh, they own a home, they must have a lot of money. That is not true. I mean, there's so many programs out there, FHA being a perfect example of one that requires 3.5% down. And many of those funds can come from, gifts from parents or relatives, or they can come from down payment assistance programs. I mean, I don't want to say that we get people in homes with no money, but there are opportunities where people can get into a home with very, very little money of their own. So I think the biggest thing that homeowners need to know, or potential homeowners need to know, is that you do not need a tremendous amount saved up.
That's huge. I remember thinking that too for a really long time.
Absolutely.
Anthony, I don't know if Amy took your myth, but do you have any other myths that you'd like to debunk about the possibilities of being able to own a home for, the common public?
A lot of people automatically assume that you need to have stellar, 750 credit scores to buy a house, which isn't true. We have certain programs that go down to 580, 560, that you could buy a house with that figure. So some people get discouraged because they're like, oh, I only have a 650 credit score, I can't buy a house today, which is completely wrong, where the average credit score in America, I think, is around the 670. So I think that's a big issue a lot of people think about. Is they don't think their credit score is, good enough to buy a house.
And then it's almost like they don't even know where to start or ask the questions, because they just have this stigma in their head. And they're like, oh, until I get this perfect credit or this high credit score, I can't even begin the process. When meanwhile, I feel like people should begin the process first, right?
Right.
Correct.
Absolutely.
Correct. Yep. And I think a lot of times the internet doesn't always help, because people type stuff in the internet and it come back, oh, you need a 700 credit score to buy houses. And they automatically think that, instead of actually talking to a trusted advisor that can, guide them in the right place.
Well, speaking of the internet, I know I'm biased because I work in social media and marketing, but how do you see the internet or, social media and the marketing online impacting the mortgage industry as a whole? I know it could be, maybe there could be some hindrance in terms of when people are searching stuff that's, misinformation. But how would you say that's impacting the mortgage industry as a whole?
I think that the internet obviously is the first place that most people go when they're looking to buy a home. I would say it's the number one place that they go. They probably don't even go to their friends or their family, who they probably should, to get, good resources. But I think it's the first place that they go. So you have to have a presence on the internet, whether or not it be through social media, a website, whatever the case may be. And we're learning this, right? So Delaware Financial, we've always heavily relied on our referral partners, but there's a whole piece of the business that we're missing because there's so many people that directly go to the internet or social media to find mortgage companies. So I think that social media and the internet play a huge role today versus what they played, 15 years ago, for sure.
And how would you say you guys use your social media marketing tools to be able to educate people online? How is that impacting even just your business?
Amy was talking about, we did referral partners for a really long time, and we still do. So we're starting to change gears a little bit, adding some videos, educational videos, throw some funny ones in there too, just to capture some people, along with, just your static post type stuff. I think in the future, next couple months is when we're going to see it really start to impact our business and help us, move forward. Currently, right now in our local areas, housing market is super tight. Not a lot of houses for sale. Definitely the girls in our office and our loan officers, they all have, a lot of people pre-approved for homes. And they're seeing us from doing all our social media ads across all platforms right now. So in the next couple of months, we'll really tell how much that has blossomed for us.
And so talking about the market right now, there's been a lot of changes over the last couple of years. So tell us a little bit about and nobody has a crystal ball, but where do you see the market going and how are things changing for people that want to buy homes and get into homes or invest into homes or buy a second home and so on? What does that look like in 2023? What do you guys think about that?
Nobody has a crystal ball for sure, but I really think, we went through a pretty high spike in interest rates towards the end of 2022, and we've seen them kind of come down and stabilize a bit here at the beginning of the year. And I think we're going to continue to see that. I don't think that we're going to see the below 3% on a 30-year fixed in 2023, but you never know. We might see it again in 2024 or 2025. But I think that now that the rates have stabilized a bit, people are taking homeownership serious again, because I think a lot of buyers got scared and said, oh my gosh, rates are so high, which actually, if you look at it historically, they were not high, and they are not high. They are still great rates. And the one nice thing is people are always going to be buying and selling real estate. And I think that everybody needs to kind of just know that and be comfortable with what their numbers are. As long as they're comfortable with what their numbers are, the rate shouldn't matter as much. Rent is going up just as fast as the rates were. So, why not put the money and invest in yourself in a home going forward? Because those rents will always go up on you. If you get a 30-year fixed, it's not going to change on you from year to year.
I'm thinking of the phrase like, what was it? Rates may be 6%, but rent is always 100%.
Yes.
I saw that.
Very, very true. Very, very true. You're paying somebody else's mortgage, so why not put that towards your own?
One of your biggest failures in your career and what you've learned from it. I was afraid of that.
But honestly, I do have to give that one a lot of thought, because I never really look at anything that we do or that I do as failure. I love to learn. And we all make mistakes. I call them more mistakes. And if we learn from those mistakes, is it really failure? No, it's learning and taking your learning and moving forward and making sure that you apply that to the next transaction that you're doing and the next life lesson that you learn from. So I'm sure that there are things that I've done wrong that I may not even be aware of. But as long as I'm learning and I'm growing from any mistakes that I make, whether or not it be in personal life or business, I feel like I'm excelling at what I'm doing.
Anthony's just perfect, but
he is. Absolutely.
Amy makes a great point. that. It is like, because failure, like, failure to me would be us, starting the mortgage company and in 3 years closing our doors. That's failure.
Yeah.
In our case, we've been here since 2004 and the company's been here since 1997. So like, yes, once a month we might have something where we might have screwed up, but we're able to fix it. I don't know if that's necessarily a failure.
Right.
Because like Amy said, we're learning from it. It's making us better so that we don't make those mistakes again down the road.
So that being said, as we're wrapping up the podcast, I want to know if there's any last minute insights that you'd give to people that, again, the general public that may have some misconceptions about being able to buy a home and so on. What would be maybe your top tip or top 2 tips that you'd give to them to give some hope on possibly being able to be a homeowner this year?
Reach out to a local mortgage broker and get educated. That's it. You don't know I'll say it again. You don't know what you don't know. So make the phone call, make the introduction, get introduced to, even if it's not Delaware Financial, get introduced to a local expert to show them the road to homeownership.
They got to pick up the phone and learn and not try to come up with the answer themselves if they think they can or cannot afford a home or what the pitfalls might be.
Awesome. So Anthony, Amy, thank you so much. I'm so excited to join you on this new journey. We really appreciate you joining us on our podcast. And thank you to all of those that are tuning in. We'll catch you on the next one. Bye for now.
Thanks so much.
Thanks, Melissa.